You guys know the 5 companies that I own. I own about $13,000 worth of Corsair Gaming. I own about $8,000 worth of iRobot, $8,000 worth of Chewy, about $6,000 worth of Tattooed Chef, $5,000 worth of Clean Spark, and there's one company specifically, ticker symbol RKT, Rocket Companies, is one that I'm really interested in buying. And so I'm gonna give you a quick breakdown, some main bullet points of this video. And so if you ever considered investing in this company, this is gonna be some of the main bullet points to look for. This is what I really think is attractive about this company and what makes me interested in investing in it. And so RKT stock is really one that I want to buy. It's one that I'm gonna be looking at. And the only reason I haven't bought it yet, well, is just flat out because I'm out of money. I've spent every dollar that I have building out the portfolio that I have. If I had more money, I would be buying Rocket Companies today. But let's go ahead and go into this video why I believe Rocket Mortgage is going to be a fantastic company in 2022 and moving on. And if you haven't checked out anything down below in the description, go ahead and check it out. Links to M1 Finance, Robinhood, Webull, Swagbucks, credit card referrals, all that stuff down below. So go ahead and check it out. I'd really appreciate it. You'd help support the channel, and let's go ahead and get started with Rocket Companies. So let's go ahead and jump over into Webull here, and let's go ahead and look at the all-time chart for Rocket Companies. It's only been public since August 6th of 2020, so it's been a public company for almost exactly 1 year from now. Now, it initially went public. Let's see, that opening price was at $18 a share. Today, it is actually slightly below that, closing this Friday at $16.78 on September 17th, 2021. Now, this company has been on a wild ride. It has trended up, it's trended down. It had that massive skyrocket up where it had almost 400 million shares traded. You can see 368 million traded on the big Wall Street bets day when it spiked up. And ever since then, this company has had a rough time. And I think that it's time that we go over the fundamentals of this company rather than just looking at the stock price. Because a lot of people look at the stock price and they get discouraged. They think, okay, Rocket must be a shrinking company. They must have had some bad news come out. And that's not the case at all. This company is growing, they're innovating, and let's go ahead and get started with the first thing I want to show here, which is some 2018 and 2019 data. Now, this is from their recent annual report that they just filed a couple months ago, and it's going to show you a bunch of the big bullet points, a bunch of the big highlights for 2020, and that's not what I want to focus on. What I want to showcase is its 2018 to 2019 data. Because we all know why the data is going to be skewed for 2020. The pandemic, the shutdowns, many people were literally forced to use a company like Rocket Companies because they didn't have another choice. Many of their lenders, many of the big banks couldn't do business, so they had no other choice than to use Rocket. But we can look at 2018 and 2019 data and give an idea of how good this company succeeded before the 2020 events happened. The 2018 adjusted revenue for Rocket Companies came in at $3.9 billion. The next year in 2019, they uptrended quite a bit as well, from $3.9 billion up to $5.9 billion. Now looking at net income, now looking at the profitability, the same thing happened on bottom line. In 2018, they just barely eked out a profit at $0.2 billion. And then it literally, what is that? That's over a 6x. It went from $0.2 billion up to $1.3 billion. Now, once again, we see that profitability and revenue just literally skyrocketed, it went vertical in 2020. But like I said, that is skewed because of the pandemic. But even looking at 2018 and 2019 numbers, you can see that they have some very good financial metrics. And same thing across the board. If we look at closed or loan origination volume, increased almost double year over year from 2018 to 2019. Same thing for net rate lock volume, almost a double up. And you can see just across this board, everything that could possibly go right for this company has been going right so far. Let's take a step further and let's go over to hypercharts.com. I absolutely love this website. It will show a breakdown of all their different revenue sources, all their different revenue streams. And then what I wanted to show, once again, quarter over quarter revenue showing back to 2019. It doesn't show 2018 numbers, but it does show 2019 because unfortunately that's all they reported because of the time they went public. Quarter 1, 631 million. Quarter 2, 937. Next quarter, 1.62 billion. Next quarter, 1.93. You can see not only is this quarter growing on an annual basis, Each quarter, every single 90 days that they report income, they're beating numbers. And the same thing for net income. This company, for whatever reason, by the way, the third quarter of 2019 didn't show up, but you can see they were losing money at the beginning of 2019, the first quarter. The second quarter, they just barely eked out a small loss. Third quarter, for whatever reason, wasn't reported. And then fourth quarter, the net income started to skyrocket. And so you can see that the operating margin, i.e. the profits, for this company were steadily uptrending long before the pandemic happened. And so this is an opportunity that I think is really interesting, because not only is this company's financial metrics trending in the right direction, let's just go over some of the main bullet points for this company. And it says, why invest, here on their main website of the investor relations page. Accelerating market opportunity. The U.S. supported a roughly 3% annual home price appreciation year over year. Unparalleled digital first brand. Constant innovation. Multiple drivers of profitable growth. Grow market share in our primary direct-to-consumer channel, expand our partner network, client retention and recapture through servicing, enormous ecosystem market opportunities. By the way, their net retention for clients is over 90%, which is very good for a fintech company such as this. But I also want to take another point out of this. I want to talk about how Rocket Companies is not just a mortgage company. This is where people are getting this wrong. If you look here at the earnings per share, right now in 2020, they produced $4.11. In 2021, they're going to finish out the year right a little bit above $2. Now, analysts are projecting that next year, they're going to do $1.05, or $1.50, excuse me. Now, I think that this is somewhat accurate. I think it'll probably end up relatively close to that number. But here's the thing. People are projecting that revenue is going to downfall and downfall and downfall in a big way. Almost $17 billion in 2020, $12.5 in 2021, all the way to under $10 billion in 2022. That's where I think that number is wrong, and I think the profitability will probably be reasonably close, because people are expecting that home sales are going to go in the toilet. And I don't really think so. I think people are still going to need to buy homes, because one of the people that will be buying a home in 2020 includes me and my fiance. We don't really care what happens with interest rates next year. We don't really care so much what happens with Rocket Mortgage next year. At the end of the day, we got to buy a home. We want to buy a home, and within reason, as long as interest rates don't go up to 10% next year, we're pretty much going to buy a home no matter what. But that said, I think what's really interesting is that people don't realize that Rocket Companies is so much further than just a mortgage company, okay? Now, I wanted to take this little paragraph that I highlighted here from the recent earnings report, and if you want to read any of the rest of this, you can pause the video and read over it, but it says, Rocket Auto, our automotive retail marketplace, facilitated the sale of 15,600 auto units, up more than 9,200 units, or 143% as compared to quarter 2 of 2020. Gross merchandise value for quarter 2 2021 was $484 million, more than tripling year over year. In quarter 2 2021, one of the largest online sellers of used cars joined Rocket Auto's partnership network, giving Rocket Auto access to tens of thousands of additional used cars to sell through its constantly expanding platform. And also, if you want to read this paragraph as well, they are also entering into the solar energy and financing solar panels for homes, which is something that I may look into the future one day. But this is, once again, this is not just a mortgage company. They usually initiate client relationships through the process of mortgages. They eventually try to work further into that relationship by expanding into vehicle loans. I'm sure they'll probably even get into things like more in depth with personal loans or even things like that. But so far what we went through is that this company is innovative, they are profitable, they are growing. By the way, the management team is fantastic. I really like the management team behind this company, but they're also buying back shares like crazy. You can see right here on the screen the share repurchase program that they announced in November of last year. A little over a year ago, they're going to be buying back $1 billion worth of stock, and so far they've been doing that relentlessly. And so when you look at this earnings per share number of 1.5, I think that that's realistic. I think that that's pretty close. I think it'll probably be just a little bit above or a little bit below that. I think that's pretty fair. But let's go ahead and pull up our calculator here. Today, the stock price is 16.78, and let's divide that by next year's earnings per share, okay? And you will see that this is an incredibly attractive number. This puts this company, this fast growing in revenue, fast growing in profitability, very innovative, growing space. It puts it at a forward PE of 11.1. Now, what I wanted to do is let's pretend for a second that everything I said was wrong. let's say that they're not going to rebound as fast as I think they will. Let's say that their growing sectors are going to slow down next year. The housing market hits them worse than I thought it would. And all these share repurchases just don't factor into the bottom line as much as I thought it would. So let's pretend that they only do $1. Well, that's simple. If you take the share price of 16.78, so 16.78, you divide that by 1, it's the same price. It's a forward PE of under 17, which, considering right now that the average in the market is about a 22, 23, depending on where you look, in the low to mid 20s in the market, buying a company like Rocket Mortgage that is fast growing, innovative, profitable, buying back shares, great management team, awesome capitalized position. It's the type of company that, in my opinion, I want to look towards owning, and in my opinion also trades at a compelling valuation and is an awesome entry point at these prices to try to buy the stock under $20 a share. So I hope you guys enjoyed this video. I'll let you know if I end up adding a position to this company. Like I said, right now I am completely out of money and I can't afford to buy any shares, but I'll keep you guys updated. Check all the stuff out down below if you're interested, and I'll catch you guys next time.